So now it's time to make a video about my post. So you guys answered and I chose 4 of each. So I'm going to be doing 4 stock for crypto, and the stocks I'm doing are going to be Coinbase, SMCI, Path, IREN, and the crypto I'm going to be choosing is Link, Dot, SHIB, and DAG. So here we go. Okay, so I'm going to start on stocks, and I'm going to start with Coinbase. And for these analysis, I'm going to be using the Ichimoku Cloud, the SMAs, and also the Gann Square. So on every chart, I'm going to be doing linear scale and log scale. So let's get started. So this is coin on linear scale, and this is the 45-degree angle. And what do you see exactly? Well, it's been resistance basically the whole time except for temporarily right here. But again, last week it wicked there. This week it wicked through it, but it could not close above. But there is a bullish indicator here that it finally closed back above the conversion line, so there's a possibility for it to continue higher. But we must keep in mind that if this baseline ever got broken as support, it could come back down to the 50-week moving average down there at like 145 or so. But currently, since the Ichimoku is 100% bullish, we're not going to consider that scenario yet. So let's go check out log scale here. And on log scale, we can pull this up for Coinbase, and we can see clearly that this angle right here is, this is the 45, by the way. This angle right here is holding as support. And what we really see on log scale is this blue horizontal line flipping to support. That's what we really see. We see it breaking out, successful back test, even back tested this angle, and now it's breaking above again. So even if this angle doesn't hold as support, we could still see it come back and retest this blue line, which is around 200 or so, 210, 211, or even the arc below around lower 200. So honestly, this is nothing bearish about log scale. So when you combine that with linear scale, it's looking like the low 200s is going to be support no matter what, and it's most likely not going to come down to these lower levels simply because there's even more confluence of the baseline right here at 199, showing that this combined with all of this right here, that support will likely hold there for a continuation up to maybe 500s or beyond, right? And next we're going to do SMCI here, and SMCI, after it broke above right here, it went directly to the 45-degree angle here, right there. That's the 45. And it got rejected basically there, and the blue arc. And since then, it went back to just retest the orange level right here. And right now, that's currently where it sits. It's been testing the baseline as support, and currently that's holding, but it's kind of stuck in a range between the baseline and the conversion line right here. So essentially 743 to 845 is the range right now until it decides a direction. And the direction could be down or the direction could be up, right? Those are the two choices because it can't stay sideways forever. So let's see which is most likely. And since the baseline is currently holding and this level is currently holding, possibly it could continue higher soon without coming down to retest this 50-week moving average at 507 or the blue angle around the same price, around 550, right? Similar price range. But before we come to a conclusion, let's just check out log scale for SMCI. And log scale, here we go. Let's map out the beginning, right? This is the 45-degree angle right here. And we can see that the orange level was a massive resistance for a long time, right? It came up, rejected, came up, rejected, came up, triple top, rejected. Finally, it broke out above, but then it just rode this orange arc all the way down and even back testing this 45 and almost coming back down to test this orange arc, right? And then once this 45 was confirmed as support, it just took off to the next level, and the next level was right here. right? That was basically $100, and it went there. It stayed there for a while, and then straight up to the next angle, which was resistance. There used to be support, but then flipped to resistance, and now you can see it is. It was once again resistance until it broke out above to the next level. Now, what I'm really seeing with SMCI is it never really successfully backtested this level yet, which is the low 500s, right? 520, maybe a little bit lower, or into the 400s, right? So it never backtested. And if you look at the history, when you come here, see the orange level, it was backtested numerous times. But the blue level right here, it just hovered around that price for a little bit, but it did go down after it broke out. It did come back down and backtest it, right? So both the orange level and the blue level both had a little backtest before it broke out. And now this time, is it going to be any different? Is it going to just continue higher without a backtest? Well, maybe not, right? So since this is at 520, 530 right here, this green level, when we go back to linear scale, we can see that this blue angle is at like 530, 540, and the 50-week moving average sits at 507, which is kind of similar in the low to mid 500s as the green level right here. So with this confluence, I would say it's most likely going to come down and at least retest the 530s, maybe even retest this angle again in the 400s as well, right? So I don't think it's really out of the woods yet, even though it's holding support here. I really think a retest of the lower levels will be necessary first in order to move higher. So we're going to keep an eye on that. But I would say there's really no rush to get into it. But no matter what, this chart is still really bullish. And if it does backtest or not, it's still probably going to gravitate to the next level. And the next level does sit around 2772-ish, right? 2700. So that will be the next target for sure. So no matter which way you look at it, a successful backtest or not, it'll most likely continue higher. So now we have UiPath and PATH, that's the ticker. This is the 45-degree angle. And what we can really see is after it broke above, it tried to flip it to support, but it failed. And once it failed, it just lost levels at a time, went back to the cloud. That cloud did not even hold. It closed below the 50-week, and then it was just game over and a 35% negative weekly candle. And now this is the last angle. It did hold it last week, but this week it closed below, right? So this chart is not looking so great. It even made lower lows from this level, right? This is the lower low from here. Is this a lower low from here yet? Not yet, right? So that's possible this could hold, but honestly, this break of the cloud, breaking all these angles in one swoop is not really a bullish thing. Could we get a little bounce back up to some of these averages up here? That is a possibility, but in the meantime, I would say this is not looking very bullish at all. So let's add that with the confluence of log scale. So here's the confluence of log scale here from the bottom, same time period. And what we can really notice is it reached the first level, right? This was perfect profit taking level right here. Take profit. Then it came down. This is the 45. It tested it multiple times on the way up, but then what do we see? It just broke with a bearish engulfing candle. That is ultimate bearishness right down to the red angle. It's so far holding as support. So my idea is if you really want to take a stab at this, the red angle is most likely the place you want to start to buy. And that kind of sits around 1160, maybe 1170 or so. So it's pretty close to that. You could start here and just dollar cost average down, but I prefer to buy more bullish looking charts. And since this really broke everything, there's going to be a lot of resistance on the way up, starting with this orange angle at 1260, then the blue, and then the 45 again, plus all the other indicators on linear scale like the Ichimoku and everything as well. So Even if you buy here, there's lots of resistance on the way up, so possibly I think it's better to look at other charts that look a little more bullish. Now, IREN is the next one, Iris Energy, and this one had a very interesting week, right? They closed the week up 35%, and it went directly to the orange arc, wicked above but closed below. So that is considered resistance because it did not close above. And so that means we could come back down and maybe retest certain levels, or next week could break above and try to continue higher to the first level, which would be a definite profit-taking level, around 12.27, 12.30. And if that happened, then it probably could come back and retest the arc and whatnot. But this chart is now really, really bullish. It's also closed at a higher high from here. So it's making a series of higher highs right there. So even if it does come down to back test some levels here, which could be around this level, like $8 or so, this chart is now looking really bullish, and it should make its way up to at least that 12.30 soon. And if we add that to the confluence of log scale right here, we can see that it has more room to go. And sure enough, this blue arc kind of sits around 12.60. So that range, like 12.30, 12.60, $13, or even up to the blue line here, $14, could be a possibility. And now this angle looks like it's flipping to support once again. And so even if it did back test, it could go down to the 8s, like I mentioned, which would be a previous level to retest a support. Previous resistance, flip support. So we'll see what happens. But this chart is looking really good to go to at least the 12s and maybe into even the 14s to take your profits for this before it tries to continue higher and higher. And now we're going to do crypto, and the first one we're going to start off with is Link, Chainlink. And this one, no surprise what happened here. It was trying to break above the conversion line baseline here, but it failed, and now it's just retesting the 200-week moving average and the conversion line for a possible successful retest to continue higher. And is this a buy zone? Well, it kind of looks like it, right? So right now it's at 1592. The 200-week sits around 1509. And price did get to 1530. So it didn't quite touch the 200-week, but almost did. But is this going to hold? Let's go to log scale and see. And here we go. Log scale shows Link perfectly. And what we can take away from this is first level broke out, successful backtest, right? Second level broke out, successful backtest, right? Third level, the green level here, resistance, really hardcore resistance, and then it got rejected, came back down, lost this angle, then it flipped the blue line to resistance for a while, broke above again, and now what do we see? Well, we see it's riding this arc down as support, right? Came above, broke below, but now it's above again. And it looks like it's holding this green arc as support. So this is really a buy zone. So anything from maybe current price down to the low 15s again would be a really good place to start buying. And could it just ride this arc down a little bit down to maybe the 14s? That's a possibility. So if you start to buy here and dollar cost average on the way down, it'll probably eventually break out to the next level again, which is $50. Which also coincides with the previous all-time high, right? So it's only a matter of time, really, before these arcs, or this top arc, breaks. And once it breaks to support, it'll just carry on with its momentum to the 50s. So this chart is looking really good. Does it need to come back down and backtest the blue? Probably not, because it already was there before, right? It backtested numerous times, so it's not really necessary to come back down here. What I can really see is it just riding this arc down until it finds another leg higher, until it finds its support, its higher low, to break above. And now we have polka dot. So this is clear as day as well. Why it got rejected? Well, it got rejected by the conversion line, and then it came back down to test a level. It tested this purple angle and the 50 and the 100. So this wicked through. It even got down to what's that, 605? Yeah, so this is looking like a buy zone, right? From now to down towards the cloud. And basically, with the confluence of the 100, with the confluence of the 50 and the angle and the cloud, this is looking like a great buy zone for a possible continuation higher. And it's still holding this support level with all these candle wicks as well. So let's combine that with log scale here. And log scale is also telling the story pretty perfectly. If you look at this, first level hit, skyrocketed through, second level hit, third level hit, the green level, back tested the blue level, back up to the green level, back down to the blue. Then this long bear market back to the orange level, where it even tested this angle as ultimate support, right? And what you can really see is, well, it's riding this green arc down as resistance. It has not really flipped to the top side too much, so we can consider that still resistance, which means coming back down to the orange is a possibility at 560, but that's kind of your maximum risk there, because look at how well that orange is support. So if you buy here dollar cost average down to 560s for ultimate support, it'll end up breaking higher and higher. So this range right here is a really good support, especially when you combine that with the 50-week and the 100-week. You can really just start buying this now, and it looks really good for a continuation back to the blue angle up here in the 9 or 10 bucks, and then ultimately to this blue level, which is going to be a lot of resistance because there, and that's around $16. And then once that can get flipped, if ever, then it'll go back up to the $45 range, which will be the triple top zone, right? So no matter what, this little risk can have a lot of reward all the way up to the top. So this is why you buy support, and then on the way up, you sell at resistance levels. So the next one we have is SHIB, and SHIB is looking like it could be currently around support. So what do we really see? This is the 45-degree angle. It went up and got rejected by that blue level, so now it's around the orange level. So this could be a good support level. So this could be a good opportunity to buy for a continuation higher. But if it ever does start to close candles below here, then the possibility of being a magnet to the blue angle and the 50-week moving average increase more and more. Now let's look at some confluences on log scale to see if this truly is a good buy zone. And log scale is showing something interesting, how it went up and broke all these levels here, got rejected at the green level, back down to the 45 was support, flipped it once, twice as resistance, and broke above, got rejected at the blue level again, and now it's getting rejected by the blue arc. So this is a tight range. We know that it's currently on linear scale in a support zone, but we see on log scale it's in a big resistance zone. Look at all these wicks to this blue arc, right? So it needs to start closing candles back above this blue arc in order for it to continue higher. Otherwise, there's a risk of losing that support on linear scale right here. There's a risk of losing this support and continuing lower down to these levels, which also shows something similar down to these levels here, right? So we're going to watch this arc really closely, and it is at support, so it could be a good buy, but we also see that it's at resistance too. So let's just keep an eye on this level to see what the future holds. And lastly, we have DAG, and DAG is breaking through the cloud, right? It's breaking through the bottom of the cloud, which is not really good. And it's also still losing the 50-week moving average here. And we can see lots of this resistance above. But like I was saying before, this red angle has been holding as support. So I believe it should still hold as support, right? Before it continues higher. Now, with all this massive resistance above, there's really no rush to buy if you're not already in it. And if it does get back down to the 3.5, 3.6 zone, like 3.5 cents, 3.6 cents zone, then that would probably be a great time to start to accumulate, if not already. But you'll have so much resistance on the way up. You'll have this gray angle, the 50-week, the 100-week, the conversion line, the cloud, and then the orange angle, right? So much resistance before things can really start to break out. And then ultimately even more resistance up here with the 200 week at 8 cents, and then the blue angle up here around 8.5 cents, right? So we'll see what that brings, but it's nearing a support zone, it's nearing a buy zone, which is a good thing, but we just have to see there's massive resistance above, so it'll just take more time. And then we pull up a log scale here, we can clearly see that the reason why it got rejected is from this 236 Fibonacci right there, right? It got rejected quite nicely there. It tried to flip the green 45-degree angle on log scale back to support, but it failed, and now it's coming back down below. So what this really means to me is it's still stuck let's take this off. It's still stuck under lots of resistance. Even on log scale, you can clearly see that where the resistance was. The take profit zone was up here around 9 cents, and now it's nearing a support zone. And could it come down to retest the arc again? I mean, that's a possibility in the low threes, so we'll have to keep that in mind. But losing this 45 just shows even more weakness for DAG, and you can see how important that angle is from the very beginning. Here, 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 right? So in order to start getting bullish again about DAG, we would really need to see candle closes above this 45, like around 4.5 cents, 4.7 cents, 4.8, right? And once that happens, then it'll start to go higher and higher to the cloud. And the bottom of the cloud currently sits around like 5 cents or so around here later in June. So this will be even more resistance, but again, we just need to go one level at a time to knock off all these resistance levels, and nothing really bullish is going to happen until we can start seeing candles close back above this 45-degree angle. So it's just more time, more patience, and just like everything I mentioned really in crypto, it's got rejected by a resistance level, so it's trying to find a support. And if you ever wanted to learn how I chart and how I trade, you can join my Telegram right here. And here is the link on my Twitter page here at @MattHughes13. So just go here, and the link to my video will be in the upper left-hand corner as well.